Are you watching interest rates and wondering, like, what the heck is going on with them? Are they ever going to go down? I'm Garrett Stewart here with Jeremiah Eck with Guild Mortgage, your professionals here for Northern Nevada. And we're going to find out a little bit about what's happening when the feds are meeting next week, the tariffs and how they're affecting interest rates, and just where things are going in general. So welcome, Jeremiah. Welcome back.
Thank you. Thank you for having me. I'm so excited to talk about it.
Yeah. All right. So it's been a minute. So tell us a little bit what's going on. First thing, of course, they're meeting next week, Jerome Powell.
Yeah, Jeremy Powell.
Yeah. So tell us a little bit of what's happening with that and what's kind of expected.
Yeah, so as of right now, they meet on the 17th and 18th, and then they only have 4 more meetings after that for the rest of the year. They only have a July, September, November, December meeting. And right now, they're not expected to cut interest rates at all anymore, to my belief.
For the year, for next
week.
Okay, got it.
For next week. Yep, we'll see how that continues to play out, but as of today, we saw positive reports in the inflation numbers, and that gives more promise, that potentially there could be some rate cuts coming.
Okay, yeah, that's good. Yeah,
we'll see.
Fingers crossed.
Hopefully.
So yeah, don't hold out for next month, or this next week, but maybe in the future months, potentially.
Yep. There's still a good chance that by the end of the year, they will at least do 1 or maybe 2 rate cuts, but not at this next meeting, and most likely not in July.
Okay. And I know one of the reasons they've kind of held off on that is kind of the uncertainty around the tariffs and, how that's going to affect pricing. And obviously, it was better numbers this morning for the report. So what are we seeing in that side of things?
Yeah, on the tariff side, we're seeing all sorts of weird things in the markets, right? Mm-hmm. Because we don't really know what to expect with the current administration. Yeah. Some days it's this, some days it's that. But as of this morning, I believe, they reached a trade deal with China. Oh, yeah. And, the tariffs, were agreed upon, and they all liked the terms essentially. So because of that, we saw a softening in the market a little bit because now we know what to expect. But in relation to inflation, the tariffs haven't totally hit the markets quite yet. They're starting to hit supply chain costs. And essentially businesses and companies are deciding on how to best absorb or, funnel those costs down. But we haven't seen anything quite yet hit the consumer.
Okay. And so that having that deal together is going to create a little bit of certainty, which in turn is better for interest rates.
Exactly.
So, so that's good. So, all right. And then, so what are we seeing with interest rates in general? I mean, what are they, are we sitting steady right now? What's happening?
Yeah, the interest rates themselves are really not moving a whole lot. If we look at a trend from December to present, they were worse in December, so they're a little bit better than they are overall, but we're not seeing them drop or down,
nothing dramatic,
or increase super crazy. The biggest piece that the markets are looking at is just the labor market, because as the labor market increases, new jobs are created every month, but also new unemployment claims are, sent in every single month. And in May, we saw where more jobs were created than unemployment claims were sent in, and that increases inflation, which pauses rate cuts, which pauses lowering mortgages. So that's a big piece, almost 50% of what the feds are looking at is the labor market. So if that continues to stay strong, we might not see interest rates taper for however long that might be.
And, the interest rate, this whole hike started around mid 2022.
October 2022.
Yeah. So it was right then where they really started to go up. And with that, what are we seeing? They've gone up some, but they've kind of plateaued. So for those buyers that are watching and they're kind of wondering, do I need to wait a little bit longer? Or what do you have to say for them?
Yeah, I would say kind of the same message if you look back on other videos, right, that we've said before, just get into the market because you have such an opportunity right now than you will not have that, right, once interest rates fall. Our clients, for example, are getting, 3%, 4% seller credits on, $400,000 houses. That's $16,000, $17,000 that the sellers are giving, to help these people get into the home, with an affordable payment, an affordable interest rate, those kinds of things, right? So if you're a buyer and you're watching and you're like, I want to wait until interest rates are 6.5% or 5.5%, when that happens, you and everyone else will be on the sidelines waiting to get it in, and inevitably home prices will go up because you have competition. But right now, if you can get in, you know, the numbers look good, whatever the interest rate is, if you can afford the monthly payment and you have the means, then I would just say start, because you're going to gain value, right?
Right. So yeah, it just makes sense on that for the long term.
Long term.
Because you can always adjust your rate down if rates ever come down.
Yes.
But you can't adjust the price of the home, unfortunately.
No.
So anything else you have to share with us, or you feel like?
No, I would just say that if you are in the market, you know, we are doing our best to help everyone we can.
Yeah. And, you know, like you said, getting some great rate buy downs. So, I mean, we just locked someone in below 6%. So that was good. So there are opportunities out there if you are looking for a better rate, just to get some numbers out there. So reach out to me for all your real estate needs when you are ready to buy, sell, or invest here in Northern Nevada, and contact Jeremiah for all of those mortgage needs. So thank you so much for coming.
And we'll see you next time.
See you next time.